Hey there, random internet strangers. It's Random Crypto Guy, and today is June 13th, 2021 at 5:24 p.m. New York time, Eastern Daylight Time. And just going to go give out the signals for this week for our dollar cost average beast mode strategy. You can always find these. They're absolutely free. Random Crypto Guy, go on Twitter, Random Crypto Guy at forex_random. I know it's a terrible name. I was in forex, long story, but I switched over to crypto in 2019 and never looked back. And the signals themselves are in the pinned tweet, and I do the signal every Sunday. And what dollar cost average beast mode is it allows you to lower the average of your dollar cost averaging, and that's taking a specific amount every week and purchasing Bitcoin. But instead of blindly buying tops and selling bottoms, what we're going to do is use calculated entries of where we're going to withhold dollars and buy Bitcoin, or go all in, or withhold all the dollars and wait for price to settle down a little bit. And that's what this is designed to do. I use special indicators that help me determine the percentages of what I'm going to buy as far as Bitcoin, what I'm going to keep in dollars, and what to hold for buying when prices are lower. And that's how we lower the average of the dollar cost averaging, is through buying dips and crashes, setting aside a little bit of money every week and buying those dips. So, and this way you're not blowing your whole wad. A lot of people, they'll come into the market and they will put all their money into Bitcoin. Maybe they have $10,000 or something, that, maybe even more, maybe hundreds of thousands or even millions. This will work with any strategy as long as you consistently put in a specific amount week after week after week. It's designed for the working guy, but anybody can do this, and you don't have to worry about timing the market or anything like that. The strategy takes care of all that. It doesn't matter if the market's going up or down. Another thing you have to consider is this is a long timeline strategy. It's an investment strategy. It's not a trading strategy. So we're looking at much longer time horizons, anywhere from 3 to 10 years plus. Just think of it as a savings account. I'm considering changing the name because I think Beast Mode might put people off, and my long scraggly hair and being kind of weird and heavy metalish might put some people off. So I'm thinking on changing it to my Bitcoin piggy bank, something a little more palatable, a little more pleasing. So let me know in the comments what you think about that. I'll put some type of if there's an interest, but I need to get more people to follow and to do this system for me to expand on the things that I want to do. So with that being said, let's move on to the actual signals. That is right here, the dollar cost average beast mode signal for Sunday, June 13th, 2021. The DCA is 52.9%. That means whatever your dollar cost average is, you are going to purchase 52.9% of that at what you're putting in today. We'll get to some examples in a moment. By the dip escrow, that's money we're going to set aside to buy the dips. When that number is a positive number, we're setting money aside. When that number is a negative number, we're going to take money out of the account. And this is just an escrow account that holds dollars to purchase Bitcoin when prices are low, and prices are starting to go up if you haven't been paying attention over the past couple hours. Actually, we'll go to the charts a little bit as well. That is, the Bitcoin by the dip is 47.1%, and the all-in, this is to set money we set aside to buy crashes. Right now prices are fairly suppressed, so the all-in numbers are very small because we are actually very close. We came very close over the past couple weeks of hitting an all-in signal. We didn't quite get there, but we did empty out our buy the dip bucket. So the all-in is still 0. For Ethereum, the DCA is 58.8%. That means you're going to, whatever your dollar cost average is, let's say that it's $100, you're going to take 58.8% of that $100 and purchase or Ethereum with it today. The buy the dip escrow is 41%. That means you're going to take 41% of that $100, or $72 or $10,000 or whatever amount that you can put aside week after week. But that's the key, is consistently week after week. The buy the dip signal is 41%, and the all-in signal is 0.2%. That means we are going to take 0.2% of our dollar cost average and put it into the all-in bucket. Couple of things. First off, I sometimes neglect to remind people of this. A couple of things. One, if you have a large sum of money, what dollar cost average beast mode allows you to do is to set aside money into the buy the dip fund and the all-in fund to purchase Bitcoin or Ethereum when they are at suppressed prices. So you're not buying tops. You're not putting you didn't put all your money in at 60,000. When we were at 60,000, these numbers, the all-in numbers, were like 10%, close to 10%, and the buy the dip numbers were close to like 60-70%. So we were still dollar cost averaging in, but we wouldn't have put nearly as much money into it when prices are getting way up there. We're getting super high and out of control. So what you want to do is, let's say you have $1,000 or $10,000, even $1 million. It doesn't matter how much money you have, but you want to set that money aside. But you don't want to buy at a higher price. You want to buy in at a lower price. Now, this isn't about catching bottoms and or selling tops. It's just relative to the price action over the history of Bitcoin, what price is relative to the average price. And so what this allows you to do is you can segregate that big chunk of change into the buy the dip fund and the all-in fund. You get to choose the percentages. I'm not a financial advisor, but what I've done is I have money set aside in my buy the dip fund, and then I have a very large sum in my all-in fund to buy the crash. So and the all-in signal occurs on average about once every 2 to 2.5 years. The all-in signal. So when that does, that means prices are super depressed, super cheap, and it's time to buy in. Doesn't necessarily mean that you're going to get the exact bottom. It just means that the prices are the asymmetric bet is stacked in your favor tremendously for the upside versus the downside. So you can take your, like I said, if you're just starting out and you have $10,000, you can distribute it however you want to into the buy the dip fund and the all-in fund, and I'll share some links with you in the description of ways you can earn interest on those dollars, while earn up to 8, 9, 10% interest on those dollars. There's more sophisticated ways that I'm learning about that you can earn even more interest, but they are higher risk, and they are a little bit more complicated than some of the simpler, more centralized systems. But anyway, to reiterate, once again, the DCA for Bitcoin is 52.9%, the buy the dip is 47.1%, all in is 0%. For Ethereum, it's 58.8%, 41% for the buy the dip, and 0.2% for the all in. And I will show these numbers again at the end of the video, just so that if you didn't get a chance to write them down. And I know I talk too much and over explain things, but I know that there's some newcomers out there too that almost forgot one more thing. Let's say that you're just starting out and you only have $10-20. What I suggest that you do is if you choose like BlockFi or something as a custodian for, so you can earn interest on top of what you put in. The problem with that is that they only allow the smallest amount they allow to trade is $1.50. And when you get down below 20 bucks and these numbers start, your numbers will start getting below $1.50. So if that does happen, the best thing you can do is probably just DCA in, and then put say you got 10 bucks, you put 150 in all in, 150 in buy the dip, and $7 in your DCA, and just do it that way. That's probably the simplest, easiest, and most effective way, until either you can increase it to 20, 30. Once you get above 30, 35, 40 bucks, then you don't have to worry so much about that. But when you're down below in that between 30, 40 and below, that's probably one of the better ways to do it. If you get down at that point where it's below $1.50 in when you have to put it in the buy the dip fund or the all-in fund. You don't have to do it that way. It's just one of the things that I recommend if you have a very, very small total dollar cost average. So I'm going to go into how to calculate this next. If you want to skip over to the charts, if you've been doing this for a while, this is old hat to you, but this is always for the newbies. I do the calculations, show you how to do the calculations. Okay, I did all the hard math for you as far as figuring out what the percentages ought to be. So, but you have to do these for yourself. And so, for our example, I always like to use $100 as your dollar cost average. Now, it might be different depending upon your situation. And as I said, if you get down below $20, $30 and your buckets are less than $1.50, just put the $1.50 in the bucket. That's the best way to do that. So, but for example, we're going to use $100 so you can see how this is done. So we have $100 per week that we can use for our dollar cost average. So how are we going to divide this up? So the dollar cost average for Bitcoin is 52.9%. So we're going to take our $100, multiply that times 52.9% equals $52.90. That's how much Bitcoin we are going to purchase today. So of that $100, 52.9%, $52.90 is what's going to purchase Bitcoin today. So let's clear that out. And the buy the dip fund is 47.1%. Oops, sorry about that. I don't know why that's coming up. Buy the dip fund, 47.1%. So we'll take our $100 again, times 47.1% equals $47.10. Now we're going to set that aside into a stablecoin fund. That is a dollar stablecoin. What this does is it allows you to keep dollars, and it keeps your price not from fluctuating as much, so that the dollar is more stable than relative to Bitcoin. Some might say the converse is actually true, but some of us also have to eat. So we want to keep our this money aside to buy the dips. Now, the dip has already occurred, and we've kind of flatlined a little bit. We kind of shot up here this afternoon a little bit as well, but we're still within that range right now. So what we're trying at this point, we're trying to refill our buy the dip bucket, because the past few weeks we've actually been buying this dip, and our bucket is pretty much dried up at this point. And so now is the opportunity to refill it, and that's what one of the things that BeastMode's very good at, is quickly refilling the bucket to either anticipate the next dip or to get ready for a nice bull run. So moving on, and then the all-in fund, there's zero going in that week. So but if there was an all-in like 1% or whatever, it can be as high as 10%. plus. So, but 100 times 0% equals 0. So you won't put anything in that bucket. And if you add these two numbers here together, they'll be $100. Okay, so let's go on to the Ethereum now. So Ethereum, the DCA is 58.8%. So we'll take our $100 times 58.8% equals $58.80. So that's how much we were going to purchase today. Now that will be different. Let's say you only have $50, so you're only going to be half of that. Or maybe you have $172.83. You got some weird system that allow you take a percentage of your paycheck or something like that. Then you can do it that way as well. So that you just multiply whatever your DCA is by the percentage, and that will give you your answer of how much Ethereum we're going to purchase today. So let's clear that out. The buy the dip fund is 41%. So we'll take our $100 or our $172.81 or whatever it is, multiply that by 41% equals $41. So that money we're going to set aside. And if you use a company like BlockFi, that's the one I recommend for newbies to start with. There's others that get a little more complicated, a little more expensive, or not expensive, but just mainly more complicated. But this is the easiest way to do it. And if I can show you how to set it up, I'll have links down below. That's all I ask. I don't ask for any money. I'll never email you. Just ask right out in the open, right out in the public, and it might help somebody else out. So that'll be $41, and then that will go into the buy the dip bucket. Then the all-in is 0.2%. So we'll take our $100. This might actually times 0.2% equals 20 cents. Now, see, in this case, this is what I was talking about. If you use BlockFi, the smallest trade amount is $1.50. So what you can do is you can choose either don't put anything into the all-in account, or you can take 150 out and then subtract that from your buy the dip fund and put that in. That's one way you can do it. But like I said, if the all-in account is for buying crashes. So that's it for that. Let's move on here. Let's move on to the charts. And if you have any questions, don't hesitate to. I prefer you ask them out in the open on Twitter, on the actual pinned tweet. That way, others can get the knowledge. Maybe somebody might be too shy to ask a question on how to do things, how to set things up. I don't mind. I don't mind at all. I actually prefer it, and so everybody can get the benefit of the answer to your question. So don't be shy about that. So let's move on to the charts, and we're going to go to the daily chart for Bitcoin. You can see this last candle here. This just popped up over the last couple hours here. I had actually put on a fake trade. This is a demo account, and I just got blown out of my position. I thought that this is a sell right here, this line here. Thought we might ricochet off of that and come back down, and that is not what happened at all. Just crushed it, and I got liquidated. It was a leveraged, but it was demo. I don't trade Bitcoin. I do the dollar cost average. I'm used to trading Forex. That's where I got my start. But you can see that we bounced off. We went all the way back up to the top side of the range. I thought we would bounce off this pivot here, but we did not. We crushed it and went up here. And now it looks like this might be an actual bounce opportunity here, but we'll see. There's been a lot of positive waves out there with Taproot signaling that it's complete. It's El Salvador making Bitcoin legal tender, and just a whole bunch of a slew of positive news. And you'll see that there's a lot more strength in Bitcoin for a change instead of Ethereum. So let's go over to Ethereum and let's take a look at that. You can see Ethereum is now kind of being the laggard. It was being the leader with this these positive sloped here, these higher lows. After the crash, we had a series of higher lows and then just kind of flatlined out of here. I wouldn't consider this back into an uptrend until we bust through this. The same thing here with Bitcoin. I wouldn't consider it an uptrend until we at least get through this orange box. Then I would start considering this, because this is a bigger pivot right here that we got to crush through to get through. That's a lot of supply. That's a huge amount of supply. That is not going to be easy to get through. So honestly, I think we're still going to see a little bit more bouncing in between this demand zone here. We got a lot of stacked and nested demand here, and this supply zone here, which is, there's definitely a lot of supply left up here with these orange boxes, these orange lines. These are turncoat, what are called turncoat supply zones. They were demand zones that broke through, and now they have nested demand inside it, in addition to being turncoat. Over time, these get very weak, but we're still very early, so they are very strong right now. But over time, they tend to fade out in their strength, and sometimes we can just blast right through them if there was a couple months in between, but we only got a few weeks in between right now, maybe 3 weeks since we crashed through them. So they are still relatively strong. Later on, maybe, you know, in a couple months, we could breeze right through them. But right now, I honestly, without some real impetus and some real, like an avalanche of buyers just coming in, which I think they're kind of laying in wait down here, more down here at monthly support at around 28, 27. I think that's where everybody's waiting for that to happen. So I don't see the buyers coming in until we get down into that 20 range. So something to keep in mind. But in the meantime, we don't really care at dollar cost average beast mode, because we have a plan with our percentages of setting money aside. And once again, we will set aside our DCA for Bitcoin is 52.9%. For Ethereum, it's 58.8%. That's how much we're going to purchase today out of our dollar cost average. The buy the dip fund, that bucket is to save to buy dips. That is 47.1%. We're putting into that bucket. And if you have BlockFi, you can use, I use USDC as my bucket for that, and then I earn interest on top of it while I'm waiting to buy the dips. And then the all-in bucket is 0. We don't put money into the bucket, but we don't take any money out of the bucket either. So, and I use GUSD for BlockFi for that. And so basically, when the money comes in, it comes in as GUSD, so I just leave it in there at GUSD. For Ethereum, it's 58.8%, so that's how much we're going to purchase today. That is, Ethereum is 58.8%. The buy the dip fund is 41%, and if you use BlockFi, I use BUSD, Binance US Dollar, to set aside the money, and all these dollars are earning 8% interest on BlockFi, in addition to. So it's not just sitting idle. It's actually, you're actually making an interest on that money as it sets aside. And like I said, if you have a big amount that you want to put in, you can put it into BlockFi or one of the other accounts like Celsius is my favorite. And in Q3 they're supposed to do swaps, and I'll be probably converting all my money over to Celsius at that point, except for money that I want to keep for either trading or in yield farming. So let's see, for Ethereum I use the BUSD, so a stable coin, and then it earns 8%. For the all-in is 0.2%, or as I said, if it's below $1.50, then just put $1.50 in there, or just put 0 and keep it all in by the dip. But for Ethereum, I use they have a PAX. It's another stable coin called PAX that I put that money in. So all these are dollars, but they're just different names. The USDC, this one is GUSD, Gemini US dollar. This one is BUSD, Binance US dollar, and this one is PAX dollar. And so all 4 of these are in dollars. They're just segregated into different accounts. That way I can keep track of them. And then when I can pull the money out when it's time to buy the dip or buy the crash, as what the all-in signal is to buy the crash. So those are the signals today. That's the explanation on how to do that. If you have any questions, don't hesitate. Please contact me on Twitter, preferably out in the open, so that others may benefit from your question. And you can go ahead and put it right on the pinned tweet. I'll be happy to answer it. And thanks for stopping by.